What's going on, guys? We're back with the intermediate guide. In this episode, we'll be talking about rounding bottoms and cups and handles. These formations, they're basically just continuation formations, just like the previous videos that we've been looking at. So let's just jump right in. So the price formation for the rounding bottom and cup and handle are pretty much the same, as you can see. So the price will come in with in an upward trend or a downward trend, as you can see here, and then it's going to follow this rounding bottom formation or this cup formation here. And then with the rounding bottom, this is where the difference comes in. It'll continue off and then show that continuation patterns. As you can see, it'll come in and it's on this downtrend here, and then the trend switches, and now it's on this uptrend, and it'll continue that through the rounding bottom. On the cup and handle though, it'll come through on this downtrend, go up on its upward trend, and then it'll reach, as you can see here, this would most likely, if it were to come in on an uptrend, this would most likely be a resistance line. So it'll reach the resistance and bounce back downwards, and then hit a support, and it would continue on its uptrend. So let's go ahead and look at some examples. So here we got the cup and handle. As you can see, the price starts right about here. Price starts right about here, and it creates a little cup, right? And as you can see, the entering of the price came from an uptrend, and then it flipped, and it came back on this downtrend, and then it did this little price formation here, and then as you can see here also, it gives its reversal. It reverses back downwards and creates that handle for the cup, and then from there you see that it follows back until its continuation pattern of the uptrend. Now, specifically how much it needs to change or go back down in the cup and handle, most of the time it'll be around 20% of the price. Like the price will decrease about 20%, and then it'll hit its resistance. But for the cup and handle, you don't really need to worry about that. As long as it does come back up, you know that the formation has started, and you probably want to put your entry point either at this resistance here, or at this resistance here. Either way, it doesn't really matter because you're gonna make the profit afterwards. But you want to make sure that the formation has started or is ending. All right, let's move on. All right, we have another cup and handle formation right here. And as you can see, they're not always perfect. It's never gonna be perfect because we're just dealing with price formations. So you got the rounding bottom coming in here, and as you can see, instead of it coming from a upward trend, now it's coming in from a downward trend, but you still have that same rounding bottom formation. It breaks it as if it is doing the rounding bottom formation, but you can see that the price retraces to a certain point, to a resistance or a support. Let's show that here. So you see it meets this, what is this, about 15 to, it's probably around 15% retracement. It comes down and retraces, and then you see it follows that cup and handle price formation. Now this would have been a little bit more difficult to read just because of the formation break here, making it look like it's a rounding bottom. But you always want to give it some time. And even if you did put it in here, your stop loss would have, if you should be doing stop losses, your stop loss would have stopped it out. And then you see that the cup and handle formation is forming. And then you would have made your ultimate profit somewhere around here. Look at a rounding bottom now. So here with this rounding bottom, you can see this is a little bit more even. If we were to give it this right here, so it's not too bad of a difference between these two supports. This support is not more than 15% lower than this support, I'd say. So you see it does the rounding bottom formation. It comes in from an upward trend. It can always come in from either way, but you want to make sure that it has this base in here. So it follows this trend, and then it reaches a certain point. And even if you want to put this as the support that you're looking at, or the resistance that you're looking at, I keep getting those confused, you would see that it breaks that here. And then you're going to see some consolidation. So that lets you know that it's healthy price action going on, and it continues to break. So if you would have put in here, it would have been a good investment. We have another example of a rounding bottom here. I shouldn't have deleted that, but as you can see, it comes in at a certain resistance point, and and then it creates the rounding bottom formation. And then here you can kind of look at this drop off as a cup and handle, but either way, had you got in the trade at this price, you would have experienced the same type of increase in worth, as you can see here. So it's just, the most important thing is recognizing that rounding bottom, whether it be a cup or handle. If you recognize a rounding bottom, you know it's going to be a continuation, and hopefully you can get in it at the right time to maximize your gains. But either way, you should be able to tell after a few days, or in this case, I'm on the 4-hour chart. So maybe a half a day of action, I should already know what's going on. And then we have another, last but not least, this cup and handle. So as you can see here, this is pretty self-explanatory. The price comes in, hits a resistance right around here. It does the rounding bottom formation, and it hits another resistance right about here. You can kind of look at that as around the same resistance, but it bounces, gives it the handle part of the formation, and then of course follows through with the continuation. So if you're trying to figure out the amount that the price is going to increase after it shows that increase in price or continuation of that upward trend, that's a little tough. Normally, there's the formations, almost all these continuation formations, you can kind of just flip this upwards, and that'll give you around the rough estimate of how far the price is going to go up. But no matter what, you should always be setting stop losses just in case the price wants to fail or drop to a certain point, and you should be ready to jump out of a trade. Also, you should be setting certain limits of percent gains. Like if you want a 20% gain or a 30% gain, and you should sell at that point or sell some at that point to ensure a gain or a profit. But yeah, that's the cup and handle and the rounding bottom. Once again, just make sure that you see the price action of that rounding bottom of the cup, and you should be good. If you see that coming in and you want to put in at the immediate point in that trade, even if you put it in and it goes downwards from the cup and handle, it will bounce back. As you can see in this scenario here, it comes down and it surpasses that initial entry point had you thought it was a rounding bottom. But like I said, always give it some days or some hours, or depending on what your candlesticks are, give it some time so you can see some price action and be sure of your trade and whatnot. But yeah, that's the end of this video. Y'all like, subscribe, and comment. Stay updated so you can continue to learn more, and you're just that much closer to being a better trader. Thanks for watching.